Insurance vocabulary. Abandonment, acceptances, accommodation line, accidental event, accrued interest, accumulation, actuary, addendum, additional clause, adjust a claim, adjust the average, all-in policy, ascertainment of damage, assess the damage, assess the premium, assurance, at all hazards, attachment, attachment of risk, average adjuster, average adjustment, average surveyor, free of particular average, general average, particular average, backdate, barratry, be insured with a company, beneficiary of a policy, benefits, blanket policy, bodily injury, branch office, burglary insurance, canceller policy, canvasser, cargo insurance, casualty, cessation of risk, charge a premium, claim, claimant, claims department, co-insurance, collision risks, commencement of risk, comply with the terms of a policy, consequential damage, contractant, contract states that, contract terminates on, contribution, coverage, cover a risk, cover note, covering note, craft risk, crop insurance, currency of the policy, damage, damage by seawater, freshwater, damage in transit, damages, damage survey, damage value, dating back, days of grace, delivery policy, discontinued premium payment, due date, effect and insurance on, endorsement, endowment insurance, establish the proof of a loss, estate, estimate the damage, evidence, extent of cover, facultative reinsurance, family history, fault or defects, file a claim, fire and theft insurance, fire hazard, fire plug, floating policy, float SAM and jet SAM, force majeure, formal notice, fortuitous event, freight insurance, friendly society, fully comprehensive assurance, general average, genuine risk, glass and sign damage, glass breakage insurance, gross premium, hail insurance, handle claims, hull insurance, hydrant, increase in the risk, increased value insurance, indemnify somebody for, industrial injuries insurance, insurance agent, insurance attaches as from becomes effective, insurance broker, insurance business, insurance certificate, insurance company, insurance consultant, insurance expert, insurance policy, insurance taker, insurance premium, insure, insured, insurer, issue a policy, jettison and washing overboard, lapse, leakage, legal protection insurance, life annuity, life expectancy, limit of indemnity, livestock insurance, Lloyd's underwriters, loss arising from negligence, lost or not lost, lump sum settlement, malicious damage, maturity, medical history, membership, misrepresentation, mutual company, NFO, no fault insurance, non-delivery clause, non-forfeiture, notice of accident, notification, notice of claims, obligatory reinsurance, old age insurance. Overinsure, paid up policy, particular average, particulars, the other party, pay for the insurance of, penalty, pilferage, piracy, plate glass insurance, policy period, pool risks, premium discount, premium due date, premium rate, process claims, professional risks indemnity insurance, proof of claims, property damage, provide cover, recoverable sums, refloat a stranded ship, restraint, reinsurance to reinsure, reinsurance exchange or syndicate, reinsurance pool, renew a policy, revival, rider, riot clause, risks covered by the policy, run aground, salvage costs, seizure, settle a claim, short-landed cargo, sickness and disablement insurance, sound value, spread the risk, spring a leak, strafe, strike clause, subrogation clause, substantiate a loss, supplementary policy, surrender a policy, surrender value of a policy, survey report, sweat damage, take out an insurance against, take out a policy, termination of risk, term insurance, theft clause, third-party insurance, third-party liability, time policy, total liability, total loss, underwriter risk, underwriter, unemployment insurance, valuation of a policy, void, voyage policy, waiting period, waiver, water damage, weather insurance, whole life insurance, WPA, wreck risks, right insurance. So insurance is a system in which one party, the insurer, against payment of a premium, promises the other party, the insured, a service if the risk becomes a reality. Thus, insurance is related to hazard, risque. But the insurer will take steps, if not to remove it completely, at least to contain it within reasonable limits. In his firm, he will bring together the largest possible number of similar risks. This is called a community of risks. In the operation of insurance, there is a degree of uncertainty involved for each insured. His risk can either occur tomorrow, or the day after tomorrow, or never. As to the insurer, his observation of the past and of present enables him to forecast with a certain margin of error how many of the risk he has collected will occur in a given period of time, usually a year. The cost of claims that occur during any given year is called the incurred losses of the year. Other items of expense are remunerations of intermediaries who produce business, staff costs, and other running expenses. The insurer also has receipts made up of premiums paid to him by the insured, together with returns on investments. Different elements will make up the annual accounts of an insurance company. What is paramount, however, is that premiums should be sufficient to meet incurred losses. The fixing of premium rates, in other words, the working out of tariffs, is determined by actuarial procedures. They process statistical data in order to take into account demographic, technical, and economic trends. However, reliable statistics may be, and however carefully processed and exploited, differences known as deviations will be observed between what is forecast and what occurs. These deviations can pose serious problems to the insurer, yet he has at his disposal a means of lessening or suppressing their most severe consequences: reinsurance. So what's the different types of insurance? Life insurance, health insurance, personal lines risks, fire insurance, theft insurance, fire and theft insurance, motor car insurance, land vehicle insurance, liability insurance, marine and transport insurance, aviation and space insurance, farming insurance, contractors all risk insurance, business interruption insurance, foreign exchange risk insurance, and country risk insurance. Other types of insurance policies in reinsurance. So even though a few years ago British firms started launching staff pension schemes for the intermediary of life assurance companies, life assurance affects private individuals rather than business concerns. Many life assurance policies are endowment policies. They may be either permanent or they may provide protection for a limited time only. Insofar as fire assurance is concerned, people usually have two policies to cover both structures and contents. After a fire, a firm is likely to be disorganized for a certain time, and yet standing charges still have to be met, although the turnover is reduced. To obviate this, it is worthwhile taking consequential loss or loss of profit insurance. Of course, premiums will vary with the location, structure, and types of business. So you also have accident insurance, which covers policies including motor vehicles, burglary and theft, sickness, public liability, employer's liability, plate glass, etc. So the owner of any vehicle is required by law to be covered in the event of claims for injuries to persons caused by his vehicle. Everybody is insured against injuries to person or damage to property. In addition, many people have comprehensive cover against damage to their own vehicles. The owner of premises is protected by public liability insurance in the case of a claim by a member of the public who has legitimate reason for being on the premises. Many insurers reinsure in bulk with Lloyd's or other companies. This is a way of spreading the risk. So some other definitions. Country risk is the risk faced by exporters and investors in relation to the degree of political, social, economic and financial stability and reliability of a given country. Exposure is the condition of being exposed to danger or loss of running a risk. Foreign exchange risk is the risk constituted by fluctuations in exchange rates and the weaknesses or instability of some currencies. Malpractice is a departure from professional duty, whether intentional, criminal, or simply negligent, that may result in injury, loss, or damage to the recipient of the services supplied. The claimant will have to prove that such services were below reasonably professionally accepted standards and ethics. Product liability is the liability of the manufacturer for any flaw in his products or the lack of reasonable clarity in the directions for use that may result in injury or damage to the user. Product risk is the risk inherent in or caused by the use of a product that may entail the liability of the maker or manufacturer, and risk management is the strategy aiming at identifying, analysing, lowering and spreading risk so as to minimize hazards and potential losses. This involves the taking out of the appropriate insurance policies. General practice. An insurance contract can be entered into orally or by letter or by use of proposal form. In marine insurance at Lloyd's, a slip is used on which the details are inserted and the underwriter initials the slip to show the extent of his acceptance. In life and accident insurance and sometimes for fire insurance, a proposal form is completed. The proposal form may simply be a convenient method of obtaining the information required, but it normally includes a declaration making explicit the principle of utmost good faith. There are certain questions which are more or less common to all proposal forms. These include the proposal's name, address, occupation or profession, and often his age and inquiries about insurance history and loss history. A temporary cover may sometimes be required pending further inquiries, and the insurance grants such interim protection where possible. A charge is made by the insurers for the protection granted. This is known as the premium and is calculated in various ways according to the type of insurance, with the object of securing a fair payment for the risk involved. The insurance policy which is issued is not the contract, but evidence of the contract, which has usually been completed sometimes before the policy is prepared. Most non-life policies are divided into sections. I'll let you read them here. So life policies are a somewhat similar form, though they do not generally contain express conditions like those found in fire and accident policies. In marine policies, an antiquated form of wording is used, which is brought up to date by the addition of printed or written clauses. The old wording is retained because almost every phrase has been tested by legal decisions. It is often necessary to vary the terms of policies during the currency. For example, when a motorist changes his car, in order to avoid the expense and trouble of issuing a new policy on each occasion when an alteration is made, it is usual to endorse the document. In the construction of a policy, an endorsement takes precedence over the original wording because it has altered the terms of the original contract. Provision for renewal on payment of a renewal premium avoids the issue of a new policy so that the original policy may continue in force for many years. Fire and accident policies are renewable at the due date by the consent of both parties, but the insured and the insurer have the option to refuse to renew. Long-term life policies are also renewable at the assured opinion, but the assurer cannot refuse to renew. This is why life policies are termed permanent contracts. Days of grace in which to pay the renewal premium are allowable. The insurance is held in full force during the days of grace, provided the premium is paid within the period thus allowed and the policyholder has not indicated that he does not propose to renew. Let's look at some phrases. So you just put the film on pause and look at them yourself. So you pause here, please. And again. This is the last page of the phrases. So thank you very much for listening to the vocabulary lesson.